We have a housing bubble in this country. I wrote about it in June of 2004. People who invested in home building stocks since June 2004 have made another 50% on their money. Basically, the bubble in the stock market was funneled into a bubble into the housing market as people moved money into houses and as the financial system has basically accommodated people borrowing more and more money, taking more money out of their houses. It's hard to miss the types of trends that have developed. And most importantly, I think, is the fact that financial institutions have basically greatly relaxed their lending standards, and consumers have greatly relaxed the type of risk tolerance that they're willing to take on in terms of financing homes. So you've got the government pushing in a bunch of credit, financial firms trying desperately to sell this credit to anybody who will take it. So they're taking on very risky customers, and customers are taking on very risky loans, and we just have a bubble in the housing market. And I think yesterday may have been the first crack in the housing bubble. Home builder stocks lost about 5% of their value this past week, most of it on Friday, almost all of it after the interest rate on the 10-year Treasury note increased again, a significant increase, and when the long-term interest rates rise, those home building stocks like Toll and some of the others just basically tanked. And I think that stocks tend to be leading indicators of what's going on in the economy. So I think we can anticipate that if this really is the first crack in the housing bubble, that those home building stocks will go down much further, and that eventually that's going to come home to roost in the housing market and the real estate markets out there. Greenspan is raising short-term interest rates. If everything goes according to his plan, that should take some of the pressure off of long-term rates. Initially it did. The fact that it's no longer doing that indicates that short-term rates are going to have to go much higher to wring out these inflationary price pressures, and higher interest rates almost invariably have a negative effect on real estate, and in particular housing. And in this case, higher interest rates mean higher mortgage payments for anybody who's on a variable rate loan. And the percentage of people who are on variable rate loans, it's my understanding, is higher now than it ever has been. So that is a problem that could be a big one